All right, welcome to this explainer, CMA Intermediate students. Today, we're basically playing corporate detective to unpack the 5 specialized audit classifications you absolutely need to master for your exams. We're looking at the subject matter-wise classification of audits. Just think of this as opening up a modern auditor's toolkit, where every single tool has a very specific, strategic purpose. So let's kick things off with a pretty fundamental premise question. In today's wild, incredibly complex corporate landscape, is just checking the financial statements actually enough to protect a business?
Well, spoiler alert, the answer is a hard no. And that's exactly why we are going to methodically unpack this modern auditor's specialized toolkit today. We'll be looking at the forensic audit, the performance audit, the secretarial audit, the human resource audit, and the information systems audit.
Okay, let's pull out the very first tool in our kit, the forensic audit, which is all about uncovering fraud.
A forensic audit is this really unique blend. It involves examining legalities by blending the techniques of propriety, regularity, investigative, and financial audits. The whole objective is to figure out whether or not the true business value is reflected in the financial statements and to find out if any fraud has taken place. To put this into the real world, just think about those massive, widely reported accounting scandals. We're talking Enron, WorldTel, Parmalat, and Satyam. In all of these cases, the fraudsters didn't just make simple math mistakes, right? The methods and purposes of the manipulations in the financial statements were totally peculiar to the specific motives behind those manipulations. And because of stuff like that, we have this statutory text from the company's Auditor's Report Order, or KARUR 2016. You'll definitely want to burn this exact phrasing into your brain for the exam. It requires auditors to report whether any fraud on or by the company has been noticed or reported during the year. If yes, the nature and the amount involved are to be indicated. This background right here is exactly why the techniques of forensic auditing have gained so much importance.
Moving right along to tool number 2, the performance audit, where we shift gears to tracking goals.
Here, we're doing an independent assessment of an entity's operations. We want to know, are these specific programs or functions actually working as intended to achieve their stated goals? Now, for your exam, remember that this serves a fundamental purpose of government accountability. Since most government bodies at all levels receive federal funding, performance audits are what hold them to objective standards. It ensures they're actually executing the responsibilities they are legally authorized and charged to carry out.
Next up, tool number 3, the secretarial audit, which focuses heavily on corporate compliance.
Now, this one is actually a relatively new concept, and it's coming to be recognized because corporate laws are just getting more and more complex. And the stakes are high, Any failure to comply with these various corporate laws can invite heavy penalties or, even imprisonment. So it's totally imperative for corporate entities to ensure they comply with all the numerous legal requirements. A secretarial audit assures the corporate body that legal requirements have been duly complied with and in time. If the auditor catches non-compliances early, management can rectify the situation with much lesser problems and costs.
All right, let's grab tool number 4 from the kit, the human resource audit, which is all about optimizing people. For this one, we're turning our analytical lens inward. A human resource audit is a comprehensive method of objective and systematic verification of the organization's current HR practices, documentation, policies, and procedures. Think of it like a gap analysis. It helps analyze the exact distance between what is the current HR function and what should be or could be the best possible HR function. Identifying that gap is what guides improvements and helps maintain compliance with ever-changing rules and regulations. But here's a really important contrast to keep in mind for your test. HR auditing is not mandatory like a financial audit is. However, even though it's optional, organizations these days are actively opting for regular HR audits. They want to examine their existing HR systems in line with organizational policies, strategies, objectives, and legal requirements. And these audits can be done by either an internal or an external HR auditor.
Finally, we've arrived at tool number 5, the information systems audit, vital for securing data.
This one is obviously super relevant in today's digital age. Grab a highlighter for this exact definition by Ron Weber. He states, information systems auditing is an organizational function that evaluates asset safeguarding, data integrity, system effectiveness, and system efficiency in computer-based information systems. Basically, it's a part of a more general financial audit. It aims to establish whether the IT systems are actually safeguarding corporate assets, maintaining the integrity of stored data, supporting corporate objectives effectively, and operating efficiently.
So what actually led to the development of information system audits? Well, there are 7 specific factors you need to memorize. First, the consequences of losing the data resource. Second, the possibility of misallocating resources because a decision was based on incorrect data or decision rules. Then you've got the possibility of computer abuse if systems aren't controlled, the high value of computer hardware, software, and personnel, the incredibly high costs of computer errors, the need to maintain the privacy of individual persons, and finally, the need to control the evolutionary use of computers.
So as we wrap up this explainer, I want you to step back and think like a corporate strategist. You've got your toolkit now: forensic, performance, secretarial, human resource, and information systems audits. Between these 5, which specific blind spot poses the absolute greatest risk if a company just ignores it? Is it the hidden fraud, the legal non-compliance, or maybe a massive loss of data? Just something to chew on as you review your notes.
Here is our quick roadmap for today. We're structuring this strictly from concept to compliance. 1. Core definition. 2. The broader meaning. 3. Environmental audit in India. And 4. An exam summary. Let's hit it. Section 1. Core definition, the golden words. If you have a pen nearby, I want you to write this down right now. An environmental audit is defined as an excellent management tool for relating productivity to pollution. Seriously, that specific phrase right there, relating productivity to pollution, is exactly the golden phrase examiners are going to be hunting for in your paper. It perfectly captures why management even bothers doing this in the first place. They need to clearly see how their output, their productivity, directly connects to the environmental footprint or the pollution they're leaving behind. Building on that idea, at its absolute most fundamental level, this audit is simply the examination of the correctness of environmental accounts. Just like your standard financial audit verifies financial statements, an environmental audit simply verifies that a company's environmental accounts are entirely correct and reliable. It's basically your baseline check. But as future cost and management accountants, you already know the story doesn't just end there, right? Section 2. The broader meaning, the accounting perspective. So this slide perfectly illustrates a really vital contrast. The basic meaning is super narrow, literally just checking the correctness of those environmental accounts. But the broader financial impact, well, that involves looking at revenues, costs, estimates, depreciation, and the actual values recorded in the books. It shifts our focus from merely verifying raw environmental data to understanding how those natural resources actually hit a company's bottom line. So the big takeaway here is that environmental auditing, in this broader sense, looks directly at your books of accounts. When you're sitting in that exam hall, I want you to remember these 4 pillars. You are evaluating the revenues and costs associated with environmental and natural resources. You're looking at the estimates of those resources. You're calculating their depreciation, because obviously natural resources deplete over time, right? And finally, you're verifying the exact values recorded in those books of accounts. It's literally taking an environmental impact and translating it into hard, auditable accounting numbers. Section 3. Environmental audit in India. The statutory framework. Now, the big question you're probably going to face as an auditor is this: when is an environmental audit actually legally required in India? Because, spoiler alert, it isn't just some voluntary best practice for everyone. Under specific conditions, it is a rigid legal mandate. To answer this accurately for the exam, we really need to look at the historical and legal breakdown of Indian statutory mandates. First off, you've got to remember the origin point for this legislation. Recognizing just how crucial this audit is, the procedure was first officially notified under the Environment Protection Act of 1986. And who issued it? The Ministry of Environment of Forests. So lock down that year, 1986, and that specific act. That is your overarching umbrella legislation that really gave environmental auditing its legal teeth here. To help you anchor the years in your memory, let's just walk through this chronological progression. It all starts with the Water Act in 1974. Then we move forward to the Air Act in 1981. Next is that primary framework we literally just talked about, the Environment Protection Act in 1986. And finally, the Hazardous Waste Rule in 1989. Understanding this timeline is key because it reveals exactly how the audit requirement gets triggered for your future clients. Okay, pay really close attention here, because this right here is pure gold for your exam prep. This details the exact legal triggers for submitting an environmental audit report. Under the 86 Act, any person carrying out an industry operation requiring consent under specific sections must submit a report. Memorize these exact section numbers alongside the respective acts for full marks. You need Section 25 of the Water Prevention and Control of Pollution Act of 1974 and Section 21 of the Air Prevention and Control of Pollution Act of 1981. If a manufacturing plant needs consent under either or both of these sections, they absolutely have to get audited. No way around it. And the final piece of our legal trifecta is authorization under the Hazardous Wastes Management and Handling Rule of 1989. And note that this rule was actually issued under the umbrella of the Hazardous Protection Act of 1986. So, to sum it all up, if your factory needs Water Act consent, Air Act consent, or hazardous waste authorization, the government says you are submitting an environmental audit report. It's just that cut and dry.
Section 4, Exam Summary, Key Takeaways.
All right, here is your ultimate exam checklist. If you can just jot down these 5 bullet points on your exam paper, you have perfectly captured the essence, the accounting implications, and the statutory requirements of this entire topic. Remember our golden phrase. It's a tool relating productivity to pollution. Number 2, it examines the correctness of environmental accounts. Number 3, in the broader sense, it includes depreciation and valuation of natural resources right there in the books. Number 4, it was first notified under the Environment Protection Act of 1986. And finally, the triggers. It requires consent under Section 25 of the Water Act of 1974, Section 21 of the Air Act of 1981, or the Hazardous Wastes Rule of 1989. Master this list and you've totally mastered the topic. So I'm going to leave you with a final practical question to test your memory right here, right now. If you were appointed as the auditor for a heavy manufacturing plant tomorrow, which specific sections of the Air and Water Acts would you check first? Keep that question and those exact section numbers front and center as you study.
Today, we are breaking down the absolute foundational concepts of auditing standards, and we are specifically tailored this for your upcoming exams. Whether you are, completely new to this module, or maybe you just need a razor-sharp refresher before test day, you are exactly where you need to be. We are going to lock in these core concepts together, making sure you have the exact terminology and the right structure you need to totally ace your answers.
Okay, let's dive right into this. This is our roadmap for today, and we're using a macro to micro funnel approach to perfectly structure your exam prep. We'll start with the concept of auditing standards, then the purpose of those standards. Next, we'll look at the global body, the IASB, zoom in on the Indian body, the ASB, and finally go over the functions of the ASB.
All right, Section 1, the concept of auditing standards. The what? Starting at the macro level, you might want to screenshot this definition because this isolated phrase is exactly what you need to memorize to kick off a really strong, high-scoring exam answer. If the examiner asks what auditing standards are, this right here is your gold standard opening sentence. Auditing standards are a set of well-defined guidelines which are followed by auditors in conducting an audit of the client's accounts. It's concise, it's totally accurate, and it gets straight to the point.
But how do these standards actually come to life? They aren't just made up in a vacuum by a couple of people in a closed room. Not at all. They are formulated by professional bodies of accountants, and they're based on heavy, collective deliberations. They pull in suggestions from all sorts of interested groups, like industry experts, academia, and regulators. This really broad input ensures that the auditor is armed with top-notch principles and techniques to fundamentally improve the quality of their audit work.
Moving on to Section 2, the purpose of the standards, the why.
I've got a massive exam tip for you right here. The why behind these standards is a highly testable concept. Examiners absolutely love to see if you actually understand the utility of what you're studying, rather than just memorizing facts. So ask yourself, why do we actually need auditing standards? Think about it for a second. The answer to this question gives you the 4 key pillars you must remember for test day.
So the crucial point is capturing these core purposes. Let's look at the first 2 together. First, standards act as a ready reference. If an auditor is stuck or facing a specific situation, the standard tells them the exact procedure to follow. Second, adherence to these standards considerably reduces audit risk. Now for your exam, I want you to link those 2 ideas in your mind. Having a ready reference directly leads to risk reduction. It makes it so much easier to recall when you're sitting in the exam hall. And here are the final 2 core purposes. Third, if an auditor conducts their work based on the relevant standards, they can always defend themselves against possible allegations of negligence. Basically, it's their professional shield. And fourth, standards improve the quality of the work and thereby restore public trust in the profession. Again, group these 2 concepts together. Defense against negligence protects the auditor, which in turn restores public trust. Actually, pause on that phrase, public trust. That is a major buzzword examiners actively look for, so for sure make sure it's in your vocabulary.
Section 3, the global body, the IASB. This is the macro who.
It all starts back in 1977. The International Federation of Accountants, or IFAC, was established with one singular, massive goal: to bring harmony to the accountancy profession on an international scale.
To actually pull off this objective, the IFAC board established an independent standard-setting body, and that body is the International Auditing and Assurance Standards Board, or the IASB.
Their mission statement brilliantly illustrates the IASB's core global objective. It says their goal is to serve public interest by developing and issuing high-quality auditing standards and by facilitating the convergence of international and national standards. Notice the focus there on words like convergence and uniformity. They literally want to strengthen public confidence globally by making sure everyone, everywhere, is essentially speaking the exact same auditing language.
Next up, Section 4, the Indian body, the ASB, the micro-WHO.
Now, what's really interesting here is how we visually distinguish these two acronyms so you absolutely don't mix them up on the test. On the global stage, you have the IASB operating under IFAC, but in India, the Institute of Chartered Accountants of India, the ICAI, which is actually one of the founder members of IFAC, has an obligation to actively propagate those global pronouncements. So locally, we have the ASB operating under the ICAI.
Let's walk through this timeline really quickly to give you a perfect chronological mental map of how that global harmonization actually reached India. In 1977, as we just saw, IFAC and the IASB are established globally. Then, a few years later, in 1982, the ICAI constitutes the Auditing Practices Committee, or the APC, to develop standard auditing practices. Finally, jump forward to July 2002, and the APC was officially converted into the Auditing and Assurance Standards Board, the AASB that we study today.
It's also super vital for you to know that the ASB isn't just some isolated group of accountants sitting in a room making up rules. Its composition is fairly broad-based. It actively attempts to ensure participation from all major interest groups. So, alongside elected ICAI Council members and professionals, the board includes some serious heavy hitters, representatives from SEBI, the RBI, the IRDA, the IIMs, and various industry associations. This ensures the standards make sense across the entire Indian financial ecosystem.
And our final section, Section 5, Functions of the ASB, the how.
For the exam, I highly recommend grouping their functions into two buckets. Bucket 1, their primary formulating functions. The ASAB constantly reviews existing and emerging worldwide practices. Based on that review, they formulate engagement standards and standards on quality control, which are then issued under the authority of the ICAI Council. And crucially, they don't just set them and forget them. Oh no, they continuously review and revise existing standards to assess if they are still relevant in changing conditions.
And this brilliantly illustrates their second bucket of responsibilities, guidance and clarification. Standards can be incredibly complex, right? So the ASB develops guidance notes for issues arising out of any standard, or for specific industries. They review and revise those existing notes, they formulate general clarifications whenever confusion pops up, and they issue technical guides and practice manuals. They are constantly supporting professionals way beyond just setting the initial rules.
To wrap up our explainer today, I want to leave you with a final, slightly provocative thought. As digital finance, global markets, and business environments rapidly change all around us, how will the ASB continue to adapt these auditing standards to maintain that absolute public trust? Thinking beyond the textbook and deeply understanding this ongoing evolution of auditing won't just help you memorize facts, it's going to make you a far better professional.
So if you've ever felt completely overwhelmed by the sheer volume of acronyms, SAs, SREs, SQCs, the whole shebang, you are in exactly the right place. We're going to build a bulletproof mental model so you can walk into your exam with absolute confidence. Here is our agenda for today. First, we'll build a clear mental map of what the framework actually looks like. Then, we'll decode the specific engagement standards. From there, we'll look at the other key pronouncements you need to know. And finally, we'll walk through the exact step-by-step procedure of how these auditing standards are actually made. Okay, Section 1, the framework of ASB pronouncements. Let's start by laying out the big picture of the Auditing and Assurance Standards Board. Understanding this overarching framework is literally the foundation for everything else we're going to talk about. So with so many rules and guidelines floating around out there, a massive question for your exam is how exactly does the ASB logically organize all this information? I mean, it's not just a random list, right? It's a highly structured hierarchy. To make sense of it, a revised preface came into effect on April 1st, 2008. Basically, the Institute of Chartered Accountants of India divided these pronouncements into two major buckets. On one side, we have engagement standards for specific jobs, and on the other, standards on quality control, which essentially wrap around everything else. Let's break down that first bucket. Moving right into Section 2, decoding engagement standards. What's really interesting about this first major branch is how it neatly groups 4 very specific types of standards under one single umbrella. So what does engagement standards actually mean? Well, it's a collective name for 4 sets of rules issued under the authority of the council that you need to be able to instantly recall. Think of this as the auditor's ultimate toolkit. The specific tool an accountant pulls out depends entirely on the nature of the information they're looking at. Here is a crucial point for your exam. You have to notice the distinction here. SAs, or Standards on Auditing, deal strictly with the audit of historical financial information. This is your classic deep dive audit. SREs, or Standards on Review engagements, on the other hand, deal with the review of that same historical financial information. A review is less exhaustive than a full audit, so it gets its own dedicated set of standards. You definitely want to keep those two clearly separated in your mind. To round out the engagement standards, we have SAEs. These are for assurance engagements other than audits and reviews of historical financial information. And finally, we have SRS, Standards on Related Services. These are for engagements involving the application of agreed-upon procedures, compilation engagements, and things like that. Now, sitting parallel to those 4 engagement standards are the SQCs, Standards on Quality Control. These are also issued under the Council's authority. Think of SQCs as a giant blanket of quality control applied across all the engagement services we just discussed. All right, let's hit Section 3, Other Key ASB Pronouncements. Beyond those core standards, the ASB issues 3 other types of critical pronouncements that you really must be able to differentiate. Examiners love to test your precision on this part. These 3 other pronouncements are statements on auditing, general clarifications, and guidance notes. The absolute key for your exam prep is distinguishing their authority. The first 2, statements and clarifications, are strictly mandatory. The third, guidance notes, are just assistive. Let's look at exactly why that is. First up, statements on auditing. Because these deal with matters the council deems absolutely critical for professional accountants to properly discharge their functions, they are mandatory to follow. There's zero wiggle room here. You have to comply. Similarly, general clarifications are mandatory in nature. Think of these as official software patches or system updates to the primary rules. Because they exist solely to clear up any issues stemming directly from the mandatory standards themselves, they carry that exact same mandatory weight. Contrast that with guidance notes. As the name heavily implies, these are issued to assist professionals in implementing the standards or to provide guidance on generic or industry-specific audit issues that don't necessarily arise out of a standard. Because they're designed to be a helpful guide rather than a rigid rule, they are non-mandatory. Which brings us to Section 4, How Auditing Standards Are Made. Now that we've mapped out what the pronouncements actually are, let's see the exact procedure for formulating them. Knowing the end product is great, for sure, but knowing how it's built, that shows true mastery. To formulate these auditing standards, the Institute adopts a highly logical 5-step procedure. It's a rigorous gauntlet to ensure every standard is thoroughly vetted. Let's walk through this exact journey. It all starts with Step 1, where the AASB identifies priority areas where auditing standards actually need to be formulated. That's immediately followed by Step 2, where a dedicated study group or task force is formed. This group is made up of a cross-section of Institute members, and they're the ones who hammer out the very first primary draft of the standard. Next comes Step 3, which is basically a massive feedback loop. An exposure draft goes out for comments from members of the Institute of Chartered Accountants of India. Moving into Step 4, the ASB meticulously reviews all those comments, takes them into consideration, and finalizes the draft. Finally, we reach Step 5. The finalized draft is submitted to the Council of the Institute. The Council reviews it, makes any suitable modifications in consultation with the ASB, and then officially issues the standard under its ultimate authority. And it's really important to remember that they don't do this in a vacuum. While formulating these standards, the board carefully considers international standards on auditing, or ISAs, issued by the International Auditing Practices Committee, the IAPC. But they also balance that global view with local realities, deeply analyzing applicable laws, customs, usages, and the unique business environment right here in India. All right, conclusion and recall check. We have unpacked a massive amount of technical exam material in this explainer, moving systematically from the broad structure of the pronouncements all the way down to the step-by-step procedure of how they're created. As we wrap up, quickly test yourself. Without looking at your notes, can you mentally categorize the 4 engagement standards? And do you know exactly which of the other pronouncements are mandatory versus assistive? Lock those answers in for exam day. But beyond the exam, I want to leave you with this thought. As global business continually evolves and wild new technologies emerge, how will the ASB have to adapt its formulation process to keep up with the next era of financial risks? Keep that in mind as you study.
So today we are building a completely bulletproof mental map of the ASB standards issued in India to really help you ace your exam. Let's be honest, if you've ever stared at that massive, intimidating list of auditing standards and just felt completely overwhelmed, trust me, you are in the right place. We're going to take that giant wall of numbers and turn it into a clear, logical structure that you can recall instantly when you're sitting in the exam room. All right, let's jump right in.
Here is our game plan for today. We'll start with the ASB Standards Framework, move into Quality Control and SQC1, cover the core auditing principles, then dive into evidence and external work. Wrap up the audits with conclusions and specialized areas, and finally, touch on reviews, assurance, and services.
Section 1. The AASB Standards Framework. Okay, so under the Clarity Project, the quality control and auditing standards got a major overhaul. They've been newly revised and logically grouped. And here's the secret. The numbering isn't random at all. It's actually a highly structured system designed to guide an auditor through the entire life cycle of an engagement. You really can't memorize the specifics until you understand this big picture of how the Auditing and Assurance Standards Board actually organizes these pronouncements.
This right here is your ultimate cheat sheet. You want to lock these categories into your mind to decode the thousands-level numbering blocks. If a standard is anywhere from 100 to 899, it's an SA. That's a standard on auditing, historical financial information. But if it jumps to the 2000s, you're looking at SREs for reviews. The 3000s, those are SAEs for other assurance engagements, and the 4000s are SRSs for related services. Memorize these 4 distinct buckets, and you instantly have a framework to eliminate wrong answers on your exam. It's a real game changer.
Section 2. Quality Control, focusing on SQC1.
Now, everything in the audit profession rests on one single foundational standard. Before any audit even happens, SQC1 sets the absolute baseline for quality control across all firms performing these engagements. Think about it. Before we even talk about auditing a client, we have to talk about the auditing firm itself. Whether a firm is doing a full audit, a limited review, or a related service, SQC1 is the overarching umbrella. It ensures the firm has the right policies, independence, and ethics in place. You can basically think of SQC1 as the prerequisite to absolutely everything else we're about to discuss.
Section 3. Core Auditing Principles.
We technically begin with the 100 to 199 block, which covers introductory matters. But the real meat for your exam and the true starting line for the audit process kicks off in the 200 series, which is dedicated entirely to general principles and responsibilities.
Notice the logical flow here as the actual work of an auditor takes shape. You start with the overall objectives in SA 200. With those set, you agree on terms with the client in 210. Next, you establish quality control for this specific audit in 220. And remember, that's different from the firm-wide SQC1 we just talked about. Then, you document your plan in 230 and immediately establish your responsibilities regarding fraud in SA 240. It just makes sense, right?
Rounding out the 200s, the focus shifts heavily to communication and boundaries. SA 250 looks at external laws and regulations. Then 260 and 265 focus inward. That means communicating with those charged with governance and pointing out internal control deficiencies. Finally, SA 299 sets the ground rules if you're tackling a joint audit.
Moving right into the 300 to 499 block, these standards form a perfect chronological timeline dedicated to risk assessment and the auditor's response. You literally plan the audit in 300. You identify the risks in 315. You figure out your materiality thresholds in 320. And then, this is crucial, you respond to those assessed risks in 330. It's a clear step-by-step phase. You also have 402 for entities using service organizations, ending with evaluating the misstatements you've identified in SA 450.
Section 4. Evidence and External Work. Okay, so you've planned the audit and you've assessed the risks. Now, it's time to roll up your sleeves and actually gather the proof. As we transition into the 500 series, prepare yourself. This is the largest single block of standards you need to memorize, and it's packed with very specific procedures and considerations. To make this super easy, just think of the 500s as your definitive block for proof. Whenever you see a 500 level number on the exam, your brain should immediately shout, audit evidence.
Because this list is just so long, we group it to aid your memory. It starts broad with SA 500 for general audit evidence and 501 for specific items. Then the standards basically hand you your evidence-gathering tools. You learn how to get external confirmations in 505, how to check opening balances for initial audits in 510, how to utilize analytical procedures in 520, and how to conduct critical audit sampling in 530.
The rest of the 500 series tackles complex risks where gathering evidence requires strict guidelines. You have auditing accounting estimates like fair values in 540 and the heavy scrutiny of related parties in 550. As you wrap up, you look for subsequent events in 560. You assess the entity's going concern status in 570. And finally, you lock in those written representations from management in SA 580.
Now, the 600 series provides some really nice breathing room. It's short, sweet, and highly memorable. It is entirely focused on using the work of others. So if you use another auditor, that's SA 600. If you rely on the client's internal auditors, you use 610. And if you need to bring in an auditor's expert, say a specialist valuer or an actuary, that falls perfectly under SA 620.
Section 5. Conclusions and Specialized Areas. We're nearing the very end of the audit lifecycle now. We've assessed the risk, gathered the evidence, and now we write the report. The 700 series dictates audit conclusions and reporting. SA 700 is your baseline for forming an opinion, while 701 dictates how you communicate key audit matters. If things aren't perfect and you need to modify your opinion, you use 705. If you just need to highlight something, you add an emphasis of matter paragraph under 706. SA 710 handles comparative information, and 720 covers your responsibilities for other information in the annual report.
That brings us to the final hundreds block. The 800s covers specialized areas. Remember, these aren't your standard general-purpose financial statements. SA 800 deals with special-purpose frameworks, 805 is for auditing just a single financial statement or specific element, and 810 governs engagements to report on summary financial statements.
Section 6. Reviews, Assurance, and Services.
Finally, let's leave the standard full-blown audits in the rearview mirror, because not every engagement is a full audit of historical financial data. Before we list them, let's clearly define SREs. These standards on review engagements govern situations where an auditor is providing a review, not a full audit. This jumps us straight from the 800s all the way into the 2000 block.
Here is exactly how the non-audit standards shake out by their acronym buckets. For review engagements, you have SRE 2400 for general historical reviews and 2410 specifically for interim information. Jumping to the 3000s for assurance engagements, you'll find SAEs 3400, 3402, and 3420 for things like perspective and pro forma info. Finally, the 4000 block covers related services, holding SRS 4400 for agreed-upon procedures and 4410 for compilation engagements.
The crucial takeaway here is taking this vast amount of information and giving it real, usable structure. Let's test that mental map right now. If an exam question asks for the block on audit conclusions and reporting, do you immediately think of the 700 series? What about the block entirely dedicated to using the work of others? Could you confidently select the 600 series? Try to review these blocks daily until the numbers just become second nature to you. What block do you find the trickiest to remember, and how can you tie it back to the audit lifecycle? Think about it, and absolutely best of luck on your studies. You've got this.